Good morning. I'm Pete Najarian. This is the Take for Market Rebellion. And what a wild ride again yesterday. I say it every single day, but it's so true. When you take a look over at the Dow and you see the Dow actually open on its highs, 90 minutes into the trading day, it got towards the lows, and then it just got into this little choppy area for the rest of the day. Meanwhile, the NASDAQ, that was pretty interesting. It was sliding all around. It had some great movement as well. But by the end of the day, both of them were down a little bit. Actually, the NASDAQ finished about up 11, but call it flat. And then you look over at the Dow and you see it down about 100, but given where it is right now, that's not a very significant move to the downside, down about 125 points. So we look at volatility though. Volatility has been getting hit and hit and hit, and it hit new 52-week lows yesterday, as a matter of fact. And so that was something into the low 19 area. So that definitely stood out for me because I've been talking about it. Feels like the intraday volatility is not getting factored in. I still believe that, based upon, again, what we saw yesterday out of both the Dow and what you're seeing in the NASDAQ and the S&P. Some of that movement, even though the close to close is a little different, it's all of that movement that we're seeing in between. But nonetheless, volatility does remain in that area under 20. At least it did yesterday. We're getting a little bit of a lift in that today. But before I get there, let's talk about that volume once again. We were just under 40 million contracts again yesterday, so pretty nice and active. We aren't up and above that 40 million mark like we were for a week or two, but we're still hanging sort of really, really close to that, right around 38 million contracts yesterday. Interesting, though, how spread out it was yesterday because only one stock, Apple, actually pierced through and traded more than 1 million contracts yesterday. Traded 1.8 million contracts yesterday, but Tesla fell a little bit short. And those two names are very frequently sitting right there at the top. So what was really happening yesterday and pushing the markets around? Well, the industrials got pushed a little bit. Financials got pushed a little bit. Both of those down, call it around 1% or so. Energy got hit pretty hard. Take a look at names like Chevron and a lot of those beta names getting a pretty good push to the downside yesterday, but that's been happening. We've had these up moves in energy and then these pullbacks as well. So it's just been kind of the standard operating procedure that we've been seeing going on so far when we look over at energy. But nonetheless, you look at Boeing, that was down fairly significantly yesterday. You look at Goldman Sachs, that was down about 1% yesterday, along with JP Morgan and some of those. Technology was really interesting. And when you look at what really was going on in between with what we call the NASDAQ, you look at technology, it was those high PE and those valuations that might not even exist. It was the Pelotons, it was DocuSign, it was Zoom, it was Tesla, I mentioned already, DocuSign. These names were getting hit pretty hard yesterday. And that really was pulling on the markets. Add in a little bit of that biotech, and you've got a pretty decent push that you had off of those highs, because from the highs in the NASDAQ, that was a couple of hundred points that they dropped to get back down and finish barely in the positive territory, as I said, finishing up about 11 points. So it continues, the dislocation in the markets. If you take a look at where the 10-year is, you can oftentimes predict and see where exactly the Dow is trading. As a matter of fact, although that movement, if you get that upward movement, you're generally seeing the Dow start to move to the upside. So NASDAQ was under pressure early, down about 130 points. It's been rallying back off of that just a little bit. And we've had a nice up and down. And this is what I'm talking about. We were up over 100 points. We got back down to flat. And the Dow just continues to shift back and forth. So something to keep an eye on. Last I looked, the volatility index was trading right around 2080. So up significantly from yesterday at least. But still on this low end of the range. There's no doubt about that. That's why, as I mentioned yesterday, I continue to see opportunities in the options market, specifically because of the fact that we're able to use that lower implied volatility in many of these various names to be able to get a little bit more bang for your buck. So I think these are opportunities that have to be taken advantage of, especially when we are seeing some of the incredible unusual and how well that's performed of late. So let's jump into some of that unusual, just because we got a little tight on time. I've got a halftime report coming up as well. Looking forward to that. That should be a lot of fun. We got some NFL talk we're going to be talking about there with my man Damian Woody. That ought to be fun. That should be great. What a great man that guy is. Does an unbelievable job with all of the coverage he does in all sports, but specifically in football. So Freeport-McMoRan, FCX, trading around 35.35. This has been a name that we've loved for a long time, and we've continued to see the love coming into the options world and buying some of that upside. So they're buying the March 26th expiring, so they get a little bit of time here, the 35 call. So they're basically buying right at the money expecting some sort of a move that could move these options pretty significantly. They were only going for about $1.15 to $1.50. And as I mentioned, 35.35 on the stock. These are in the money calls by that, call it 35 cents. So that stood out for me. I really like the look of that. I've been in Freeport many, many times, and I continue to see all this activity. It's taken pauses, yes, and maybe even a little bit of pullbacks. That's all healthy, but we continue to see this path that moves higher for many of the names in the material space as well. We talk about U.S. Steel oftentimes, and we talk about many of these different names, Cliffs, all the rest of them. So EEM is the other one. I normally don't talk about ETFs. I'm not a big fan of talking about the ETFs, but I will say this. In this particular ETF, when you're looking at the emerging markets, you are oftentimes looking basically directly at the Chinese names that are under pressure today. We see some really big pressure across the board in multiple different of those, specifically those tech names from China. They were definitely under some pressure today. So it was trading right around 53.60. We got a buyer of 10,000 of the March 54.5 calls. So basically, very, very short term, looking for sort of a spike, maybe a little bit of a rebound off of the lows. And we'll see very inexpensive options as well, trading in the teens, underneath 20 cents for these options. But the EEM is going to have to make a move in a hurry. So we'll keep an eye on that as well. Understanding is the key. Having knowledge is definitely something that you're going to want in the derivatives markets. We continue to talk about the educational system here. The guys are the absolute best, the guys and gals. They're doing an amazing job. And I look forward to seeing you. Got different unusual coming at you on the halftime report. We got a whole show that's going to be really, really fun, talking about some of the stuff that's going on with rates. But then we get a little bit of that football talk as well. So looking forward to that. Folks, have a great day at trading.